Hi, I'm prop trader Richard Jackson, traded for the last 20 years, and I'm going to walk you through my equity curve for the last 6 months. I'm going to show you exactly how I did it and what happened during that time. So over the last 6 months, there was good days, there was bad days. It wasn't a straight line all the way up. There's ups and downs, and I'm sure a lot of you can relate to that as well. All right, I'm going to get straight into it. Okay, guys, just a quick disclaimer at the start. This is general advice only. All I'm going to do here is show you what I've done. It's certainly not possible for everybody to be able to do this. And trading is a risk product, so it's not suitable for everybody and their needs. Okay, guys, let me just quickly refresh this chart so that you can see that it's real. This is FX Blue. It is a third-party analytics software which plugs into the broker account. And what it does is it's third party, so it's arm's length. So I can't get into the back of it and do anything with it. So just to show you that it's verified and real. All right, let's talk about the equity curve here. Obviously, at the start, sometimes you just go sideways until you find your rhythm, okay? And then, this is obviously what happened in here, and then a little bit of a run up, okay? So everybody can relate to the fact that sometimes at the start you're not going to get initial wins straight away. Okay, so the idea is to be calm and stay centered and let the market give you what you deserve in time. Okay, over here, this period in here, this was a competition that we ran internally in Lepus proprietary trading, and I wanted to take part in that myself. So I stopped trading over the September period. What I also did is I had a holiday with my family over in Bali for a week and a half during that time. And during that time, some of that time in there as well, I just switch off. Whenever I'm on holidays, I switch off. I don't engage in trading. I give myself a break and then come back to it when I'm fresh and I'm ready to sit there and focus on it properly, okay? Certainly not doing it off my phone. Certainly waiting until I sit in my proper office and analysing the market correctly. Obviously, when we came back, this huge run up in November, late October, November, higher volatility, everybody loves it. And this is a trap that everybody falls into. When you get a big run up and you make all this money, you get all excited. And then typically what guys do is that they increase the size and do something silly and just give it or half of it or all of it straight back, okay? What I do is I manage to hold on to it, okay? Holding on to it by, correct risk management, even just giving yourself a couple of days, a weekend, a long weekend even, just to slow down, calm down, don't get too excited, get the heart rate down, okay? Don't show off to your friends that you made it, all that type of thing, so that you can hold on to it. This period in here is obviously Christmas, and that again I think it was the 19th of December all the way until the 6th of January, I didn't even look at the charts, okay? Then you come back with a fresh mind, all eager to go, and you've obviously managed. I did pull back quite heavily in here, okay? That was probably the biggest drawdown in the whole period. But I wasn't panicking because I know from experience, and this is something that you don't read in a textbook, from experience, that the market will come back and will give it to you, okay? Even if you have 1 or 2 days that are a little bit off, you've got a day, you've got the next week, you've got the next 6 months, you've got all of this period. So in looking at this, I'm expecting a big run up like this to happen again soon, okay? And what that means is I can be patient over this month, which is January, February maybe, and then March is going to give it all to me. Again, another big run up, okay? Let's have a look at some stats. Over here, 5.7 monthly return on average. What we typically look for with our prop traders is 5 to 10% per month. Now let's put that into context. A fund manager, or in your superannuation or something, if you're making 20 to 30% in a year, you're doing pretty well. Okay. Now we're looking at 5 to 10% per month. Okay, and that's completely in our control, okay? It's not subject to market fluctuations. We're day trading, swing trading this, so we know our return pretty quickly, all right? Next one, down here, days return, this is for me, I've got an 80% win rate on days. Okay, what does that mean? Out of 2-week period, which is a 10-day period, trading day period, I'll win 8 of them, okay, on average. So having a high win rate is very good for psychology of new traders, okay? Having a high win rate, and I'll show you exactly how this is done in detail throughout our training, but having that high win rate helps you keep going, gives you confidence, okay? Weeks in there as well, that's close to the 80% mark, and obviously months in the last 6 months there, I've got 100% win rate on that, okay? Let's have a quick look at that over here. Okay, first one, 3.8% return, 5.1%, 7.4%, a big one. This is the big run up in November, 17.8% return on that one, 4.4, and January 1.6 so far. So this probably January. We've still got some time left in January, so I'm should be able to get that to 4% at least. Okay, so on average there, 5.7%. So you know, not every month's going to be a really good month, but when the good months happen, we've got to take advantage of them, and you know, that's when you're going to get your return. Okay, and you can see the dollar figures there. You know, that's not important. I don't really focus on that. It's really the percentage return. When we always talk in our group, we always talk about in points. We never show off our dollar figures with each other. Okay, but they are there if you want to have a look at them. Okay, so that was my equity curve and statistics there, and this is what trading's done for me. And what that means is that I can spend more time with my family. I can spend, you know, I've got some finances behind me. I've got a lot of free time to go and do whatever I want, whenever I want. But it's not for free. You've got to be, at the start, you've certainly got to work really hard at it, and you've got to put in the time and effort, get to have the experience that I've got. Okay, when I started, it took me a little while to get that experience, but once you've got it, then you know, for me, it's worked out pretty well, especially around being able to handle the pressure of when you get into drawdowns, especially, as well as having increases in your equity curve, so that you hold on to that money, you don't blow it up. But if you can manage that, then the reward is certainly there. Again, you've got to work hard at it. And I hope this video has shown that it's possible. It's been possible for me, and it may be possible for you.